Hello everyone, welcome back to the channel. Today I have a special guest with me. His name is John Lai. He's the CEO and president of PetVivo, a biomedical device company focused on the commercialization of innovative medical therapeutics for animals. I'm a huge fan of animals. I have 4 dogs at home. I'm very excited, John, to have you on the show and see how your company could potentially help my dogs and many other pets around the world. So welcome to the show.
Well, thank you, Jay, for having me.
My pleasure, my pleasure. So just before we get started here, PetVivo is listed on the NASDAQ under the ticker symbol PETV, so PETV. So John, let's get right into it here. So what is your vision for PetVivo and what is your company really trying to accomplish here?
So we're bringing a lot of the technologies that we worked on because we were originally funded by NIH and the Department of Defense on the human side. So when I joined the company, they already did 12 years of clinical research for NIH and DoD on the human side of the market. So when I looked at the clinical trials, I said, oh, wow, we could take this right into the animals and we won't have to do any trials and we get the ability to sell right into the market. And that's exactly what happened. So we have a lot of human data, and I kind of jokingly did an interview once and I said, you know, Peter kind of loves us because we injected 145 humans before we injected their pet dog. So what we have developed, we've developed a protein particle matrix that mimics cartilage and tissue. And it has multiple applications within the companion animal space as well as the human space. But the initial product launch is called Spring with Osteo Cushion Technology. It's a naturally derived product that we inject into any articulating joint, and it functions just like the cartilage would have. And what happens is when the particles go in, and it's called intra-articular injection in veterinary terms, once it's injected, it forms a matrix and develops a scaffolding. And that actually improves the joint over the next several months. So it's not like the other treatments when like hyaluronic acid or steroids, cortisone. Upon injection, it's usually the peak benefit occurs right away and then it diminishes and it's very short-term oriented. Our product, we say, lasts at least a year. And with the particles in there, we're actually addressing the root problem that exists with osteoarthritis, and that is bone-on-bone contact. Everyone has been focused on creating a better pill or masking the symptoms or using some type of stem cell therapy. And it's just providing really short-term situations masking. While ours is actually addressing the root problem, and hence we're able to actually reduce the need for pharmaceuticals like NSAIDs or steroids. What we have found is every dog we have injected, we've reduced the need or eliminated the need. And since our product lasts a year, it's quite disruptive to the industry, or it's quite innovative, because when a veterinary doctor comes out of vet school, they learn once they do a diagnosis of osteoarthritis, it's a lifetime management or using multiple tools to treat the osteoarthritis. And generally, the gold standard is taking an NSAID, and NSAIDs have multiple side effects because, like any pharmaceutical, it has side effects. So you get gastrointestinal tract bleeding, kidney, liver issues. Also, there's an issue of compliance from the consumer. You're asking a person to give a dog a pill once or twice a day. That's not that easy to do. So they tend to sometimes just say, forget it, the dog looks better. And in fact, it isn't. And it also ends up masking the pain, and that allows the dog to run and jump in situations it would not. Our product actually provides that protection of the existing cartilage and functions just like the old cartilage because the particles are wet and lubricious, and once again, it's naturally derived from collagen, elastin, and heparin, which are the basic proteins of cartilage building.
So you mentioned masking the pain there with the usual product.
Yeah.
So are you saying that the dog would actually feel pain, but just would be getting better?
So it's just like if we were taking Tylenol Or
Yeah.
NSAIDs, it brings the inflammation down. NSAIDs is based on bringing inflammation. Tylenol is basically blocking the pain receptors.
Right.
So if a dog is in pain, it may not jump off the steps. Well, if it's masking the pain, it's not feeling it, it'll jump, and you got weak cartilage to begin with. You actually end up tearing it quicker. And so ours is in there to protect that existing cartilage. So we feel we have significant therapeutic advantages. Also, from a cost standpoint, we definitely have economic advantages. And ours is actually covered under pet insurance, even though only 4% of the pet owners have pet insurance, but that is growing at 25% a year on average for the last 5 years. And we expect that to accelerate because you're actually seeing in the real world, like companies like Trupanion or Nationwide, they're private labeling. Trupanion private labels to Chewy. So when you go into Chewy, you're buying a Chewy pet insurance, it's really Trupanion. So we see that accelerating here, and that's a good tailwind for us.
That's so cool. I mean, yeah, we're seeing it all across the board too. Like, I see it all over the place. It's like people almost treat their pets, better than themselves, right? They take care of their pets more than themselves most of the time. Like, for example, my girlfriend, she, she used to basically cook all the meals for her dogs, like organic chicken, grass-fed beef, like all like the best kind of high quality foods. And then she would go out and like eat like, junk
McDonald's.
food. That's exactly what I'm saying, right? So it's
I know.
that's more of a societal kind of trend, and we're people just care about their dogs so much. So I feel like you guys are onto something here, and I love to hear that. How's the progress been so far with your trials, and can you kind of, I guess, maybe deep dive into that?
Sure. So what we did, since we got on NASDAQ August of 2021, with the capital that we raised, we wanted to build a very strong foundation. So we put the pieces in place. The first thing we did was to build a production facility that allow us to do large volume production. But that facility is actually certified for high levels of human medical device manufacturing, ISO 5, 7, and 8. The next step we did there was hire Josh Wilhelm. He has extensive background and history in doing large volume production of our particles. And it's basically we create a particle that we put into a syringe. And these syringes are sold to the veterinary doctors. So our current facility can do 500,000 syringes a year, which would mean top line revenues of about 125 million. But we can scale and double that in about 120 days to 180 days. And it's a function of adding robotics to help speed up the filling process. We can go to 1 million syringes, which is 250 million top line. So we're pretty set on that. And we're in a unique situation where when we scale, our gross profit margin goes north of 70%. So the next piece of the puzzle we figured we needed was strong marketing. We brought in Russ Sickle, probably 35 years of experience in senior marketing director positions with Zoetis and Boehringer Ingelheim, the number 1 and number 2 players in the world in the veterinary product space. And then we follow that up with strengthening sales. We brought in Mark Middleton, president of Animal Health International. I think Animal Health International went from like 30 million to 300 and some million in a very short period of time, and he managed a couple hundred sales reps. So we were set there. Then if you look at our recent news releases, we started pulling regional salespeople that had at least 25 years experience in the field, and they come from Covetrus, Zoetis, Merck Animal Health. Everybody keeps saying, how are you pulling these people that are running divisions within there? And I said, well, they recognize we have a unique disruptive product that is going to grab market share and significant market share. And we're also improving the quality of life of the animals as well as the enjoyment of the pet owner and reducing costs of healthcare for that area. So when you have those, you're able to pull talent like that into our company. Because if you look at our Chief Operating Officer, Randy Meyer, he was the CEO of Taxo Medical, human medical device company. They took public by Piper Sandler, I think at about 60 million market cap, $2 billion. We pulled them over. We pulled over April of 2021, Bob Folks as my CFO. He was the chief operating officer and CFO at Tapso Medical. And then we pulled teams of very experienced, seasoned people that have. If you look at my board of directors recently, Rob Castino, he was president of Mitsubishi Credit North America, CFO of Wachovia Bank, CFO of Volvo International. So some pretty high-level Fortune 100 type caliber team that have come in. And they're all not in just for the money, even though we're aligned, because if you look at our Form 4s, we've been net buyers or absolute buyers of the stock, and we take compensation more in stock than cash. So we're betting with the shareholders and aligned with the shareholders. So we feel we have all the pieces in place now. And then recently, in late June of this year, we announced an exclusive distribution partnership with MWI. MWI is owned by AmerisourceBergen, ABC ticker symbol on the New York Stock Exchange. They're the leaders in veterinary product distribution in the United States, well, actually in the world. They do $5 billion a year just here in the U.S. So we did it comes up to 3-year exclusive distribution if they're able to hit certain numbers within periods of time, which we feel very comfortable they will. And so that put us from 5 regional salespeople. Now with MWI, it's 400 territorial managers and 300 in-house salespeople. So we've been working and supporting because the caliber of people we brought in, everybody kept saying, why are you bringing guys like that in? Because I don't see them making cold calls on individual vet clinics. Well, these people know how to run a sales force. So they're going to be the basically support sales force for the MWI sales team. So we feel very happy about that because it was probably 2 years ahead of schedule. We weren't anticipating of getting those because we have various animal trials that are coming to fruition here in the next 6 months. We figured we had to get those done before attracting them. But because we have had the product out there and getting such great success among the vet network, they kind of jumped the gun betting on the basis that our clinical trials are going to be good. And these are not for the FDA because we didn't have to do any of it because what we did on the human side and the declaration on the human side as a medical device, the companion animal side or the animal side of the FDA automatically accepts that. We're doing this purely for marketing purposes. And we're very comfortable that the data will support what we're seeing in over the 1,000 dogs and horses that we've injected, that we have seen a tremendous improvement in mobility and quality of life and life extension. And we're actually really expanding the TAM. The total addressable market for OA, lameness, and rehab is probably around $4.8 billion, growing at 7.4% a year. We're actually creating a segment that we feel there's no competition, and that segment is joint life extension or providing an option to someone that can't afford a surgery. So a dog could be at a point where the owner clearly sees the dog suffering, brings the dog in, and the vet goes, there isn't anything we can really do other than surgery. It's going to cost you $7,000.
Yeah.
A lot of people don't have $7,000 sitting around to just do the surgery, so they end up putting the dog down. What we're providing is an option that's probably around $600-700 for the person that could extend the life of that joint and the dog, and not just extend the life, but give a better quality of life that the dog can run and enjoy for the next couple of years. And that's significant in dog years, 7-to-1 ratio. So you could be extending 21 years.
No, that's huge. That's the quality of life really hits hard. It's like, one of my really good friends, like his dog was struggling hardcore, and unfortunately his family didn't have the means to do this. And a product like this would have, I know for a fact, like they would have 100% went for a product like this and extended, a year, 2 years, maybe even 3 years, the life.
And we say the product lasts for a year, but in the real world, we've seen it last beyond a year.
Right. Yeah. No, that's huge. You mentioned being aligned with shareholders, and that's fantastic. You see so many smaller cap companies, mid cap companies, like they're, a lot of them are not aligned with shareholders, and a lot of the management team kind of takes advantage of certain, the way the market works and retail. So that's huge. Can you give us a clear idea of what 2023 really looks like for you in terms of success? Like, what would be a success and what would be a failure for 2023? And then how will that align with shareholders?
Sure. So because we took our time putting the structure together and foundation, so it's just a function now of supporting the sales with the proper marketing, the ads and trade shows, the various educational pieces that will come out the trade show. One of the reasons we really like MWI partnership is they have a division called Securos. Securos is an educational arm for veterinary doctors that will provide their continuing education credits and everything. They do all the demonstrations, the majority of them at the major trade shows. So they'll be using our product Spring to demonstrate and also educate how different this is. So we started the launch and we sold, so MWI is our customer. So we sell to them and then they sell to the veterinary doctors. So we ship to multiple distribution centers the end of September, and they started shipping to veterinary doctors on October 3rd. And it's going very well. It's, in my mind, it's a subjective call because it's really hard to forecast early on when you roll something out, because on anticipation, you have a built-up demand. So on that initial orders, you can't really judge. If it stayed out there, I'd be extremely happy. So I'm hoping it stays there, obviously, but you got to look at the spike and then the settle and then the trend back up. So that will tell a lot. But I'm feeling really good by the excitement of the sales reps, as well as the veterinary doctors that have been using it. So on our own, we have veterinary clinics that are using the product in 47 states before MWI came on, which is really good for a short period of time and a limited amount of salespeople. With MWI, we're probably into all 50 states right now because they handle, or they have accounts or sell to 90% of all vet clinics in the United States.
Mm-hmm. Fantastic. So just looking at your recent financials, I know that, cash burn over the last 12 months, the trailing 12 months was 5.8 million, right?
Yep.
As of June this year, you had 4.4 million in cash. That means like roughly, 3/4 of a year from June, assuming no changes to the burn rate. Can you tell us a little more about the plan here for you guys? And
sure.
Because obviously if you needed to raise this amount again at this market cap, obviously that brings significant dilution. So
yeah. So if you look at what I said in August of 2021 when I raised this, that was the worst month to go out in the market. It was the only month in 20-some years that had negative cash outflow. Mm-hmm. And we were doing a $10 million deal. We had 58 million committed from the deal. The bankers tried to get me to take 30. And I said, no, I have what I feel is a multiple amount of catalysts. I'm taking the minimum of the 11. And upon that, I said we would be needing to raise money sometime in the first quarter of 2023.
Right.
We're still looking like pretty much on the same type of schedule. But mm-hmm. The good thing is because we're hitting these milestones and we signed a major distributor ahead of schedule, we've been fortunate. We do have a lot of institutions that say, John, you only have 10.1 million shares of stock. 35% is held by insiders. The float's only 5.4 million. Nobody wants to deposit their shares. We tried to start buying 20,000 shares and it's up 20 cents. So let's cut a deal to get a block of money. And so, at the right time, right place, because we have the ethos study, which is public information by the end of October, will be done for small animals. Mm-hmm. Ethos is owned by NAV, which owns 2,000 small animal clinics. So we feel once that study is done, we're going to capture some of those 2,000 clinics because it's their own internal research on. They're not going to question the data is good. But it really doesn't get published because it goes through peer review. So it takes about 6 months. Right. So that won't get published, but there'll be abstracts out there and people will clearly see the data. And just by talking to the veterinary associations that have been using the product, as soon as that study comes out, I'm pretty comfortable we'll get some endorsements from major organizations that veterinary doctors belong to.
Fantastic. Yeah, no, I mean, look, that's obviously the cap table and the share structure right now is very clean, right?
Yep.
So it allows for that flexibility, and that's great. If you haven't, that might just wanted to kind of get your.
Yeah, no. I mean, with other companies, they have to do a 50% discount to raise the money. I don't think we're going to have any of those issues.
Yeah.
Just because institutions, they tend to have pets too. And they start talking to their vets, and then their vets talk to some of the vets that's been using our product, and they're coming back going, holy cow, John, this stuff really works. I said, well, yeah, why do you think we're so committed to this?
There'd be a problem otherwise if you weren't confident in the product. So
and we wouldn't be pulling the people from, Merck Animal Health, Covetrus, Zoetis.
No, that's awesome. So we talked a little bit about the present, a little bit about next year. Let's go like 5 years down the line. What is really the end goal for PetVivo, and what really kind of like makes you get up in the morning and say like,
sure,
wow, we did it. What's the end vision?
So, there is a lot of excitement and joy because I love animals. And when I'm getting stories emailed from pet owners, from veterinary doctors, how well their animals are doing and they're shocked. And if you look at the MWI agreement, it's just not for spring with osteocushion. It's all veterinary products.
Mm-hmm.
So we have probably another 5 products in the pipeline that doesn't require any regulatory work. So we have a feline version of the spring will be coming out. And all these just require a very short-term study to show efficacy, like a 6-month, maybe 9 months. And then you can launch the product, and we're very comfortable it's going to show superior efficacy over what's in the marketplace. So it's quite disruptive in that nature. And then eventually in the next year, because a lot of this work was done on the human side, we would probably file an IDE to go into some of the human market for human hips, human knees, human spine for soft tissue. I mean, how I got involved was the patent counsel at Frederickson Byron, probably the second largest law firm in Minnesota, or the Midwest, actually.
Mm-hmm.
They handle a lot of the Medtronic mergers and acquisitions and technology transfers. And they called me up and said, John, look at this company's clinicals. Look at all the research they have done. So the scientists loved it for 12 years. He just kept getting money from NIH to do research and then peer review, and he was getting papers published. He was getting known in research, but he should have never taken money from private investors. So those private investor goes, well, nobody's benefiting except, the scientists having a lot of toys to work with. So he developed like 17 different potential products, and 21 patents on a global basis. Yeah. And the initial science was done out of the Rochester Mayo Clinic. So it's peer reviewed. So nobody ever questions the science. So I feel there's many opportunities within the human side of the market too, because we have coated stents, drug-eluting stents that have no thrombosis.
Yeah.
And the attorney that brought me in wrote the first drug-eluting stent patents for Harmonics, which is Johnson & Johnson. He says, look, Johnson & Johnson's after 30 days start creating thrombosis. Ours has 0. And that's a major breakthrough. Or creating a vascular shunt that has 0 clotting, artificial shunts. Artificial shunts probably in the first few hours, 30% of them will clot. Our shunts were in pigs for literally 30 days with 0 clotting. So there is a lot of potential and a lot of good data that will allow us to go that market, but I'm not going to do that initially because I don't want to have to build a sales team and spend $300 million to educate doctors and wait 5 years before they use the product. I'd rather get spring going, animal side, cash flowing nicely, doing extremely well. Then it puts me in a strong position to negotiate partnerships with companies that already have human salespeople out there selling the product.
That makes a lot of sense, and that's crazy. That's a lot of. I mean, if you get to the human side and it eventually becomes a thing, like that's, it's obviously.
Hey, if I could, I would be injecting my own back. I have a bad back. I would be injecting my own hip. But if the FDA found out, they would be mad at me. I probably wouldn't let us get cleared for 20 years. So I stay away from it and have to go see chiropractors and get cortisone shots.
Yeah. I was going to ask, have you ever snuck it on yourself? But I guess you just answered my question, so that's all good. Great. So outside of the regular issues, like what do you think would be the single most largest risk right now to your company?
So I hate to say this because we're dealing with teams that have launched multiple human medical device and animal device products. We really do feel we have identified pretty much every risk. The risk, that you can control. There's always risks you can't. If, Putin fires off a nuclear weapon, I don't care what you look for. You can't anticipate that or hedge for that.
We can use spring and then we'll be fine after, even if.
Yeah. So, because we have all done this before, a very seasoned management team, and if you look at our board member, Robert Regalius was managing partner of McKinsey Group Asia. He was president, control data president of AT&T Information Systems. He goes, John, we were the first to launch the cloud back in 91. I said, well, it doesn't matter, Robert. Nobody could get to the cloud. And he started laughing. He goes, very true. So we do have excellent management team all the way across the board that have done this before. And I think that helps us avoid a lot of the pitfalls, and we took our time. Because if you really think about it, there isn't really any holes in our thing. We have injected so many animals. We're very comfortable with the data. We're seeing the results. It's not even close of our product out there versus a competitor's product, because we are addressing the root cause of the problem, while everyone else is still just providing temporary solutions.
Absolutely, and I've personally followed your story and the PetVivo story for a little over a year now, and so I'm familiar with it, and to me, again, I wouldn't say, like, as an investor, I wouldn't say there's no risk, but it does. The reason why, like, I'm supporting this story is just because, like, I think that there is a potential to really make a difference in many animals' lives, and being a dog owner myself, like, I think it's the idealistic side of me is like, yes, let's go do this. Like, I'm rooting for you guys. You know what I mean? So that's great.
Yeah, because if you look at the risk reward, what are we at? About a 27 million market cap. Yeah. You look at other companies that are 10 times ours.
Yeah.
They're still going through clinical trials, trying to get through the FDA, and they've spent 600 million to date. What haven't spent that much, and we're revenue generating now.
Yeah. So then I'll flip this question back to you then. So, like, why do you think that is? Like, why do you think those companies are getting those higher valuations?
Sure. So what happened was, when I joined the company in 2014, we were going to come out with a very high valuation. But the scientist didn't want to go into the animal side, so he gave me just a license for the animal side. So we did that, and then the scientists saw the valuation I was getting on just a license for the animals north of 100 million, and I did a non-deal roadshow, and in a week, we were only looking to raise 10 million. We had 30-some million committed for it. He goes, wow, John, how did you do that? I tried to go out and raise money at 6 million. I couldn't do it. I said, well, there's a little difference. You're known for clinical research. And I said, I think I'm more known for getting stuff to market. So he says, why don't you acquire me? But because I have 110 private placement shareholders that gave me 300,000, which blew my mind, and the majority of them were not accredited. So he goes, you have to be public before I let you acquire me. And I said, well, of course I'm going to acquire you. I get all the patents. I get everything. I get the 17 products in the pipeline, potential products, and I don't have to pay you a royalty. Why wouldn't I do that? Mm-hmm. So I went and found a publicly traded entity under QB, OTCQB, and did a triangular merger, brought all the companies in. That was the only way he was going to merge the company. So I did that, and then we were going to go on NASDAQ. And on our way to filing our S1, the accounting firm lost their PBCOB certification, the SEC certification. That means we have to re-audit basically 3 years of numbers. So S1 was not valid. Well, our stock fell from like 150 million market cap down to 4 million because you had a skull and crossbone. You got 2.5 years of no good financials, So that wasted 4.5 years of my life because I took my time, found a second audit firm. The partner of the audit firm sits on the Public Accounting Oversight Board of Colorado. The audit firm's in Colorado, 30 auditors. I was thinking I was home free using a guy like that. And 7 months into the re-auditing, they lost their certification. And, you're probably familiar with a lot of it because all these smaller firms that did the Chinese reverse mergers, they claimed they didn't do a good enough job in China because it was all fake stuff. They all started losing their certifications. Yeah. So we were caught up in that. And, at that stage, we were pre-revenue. We were just paying bills. It does not make sense to use a Price Waterhouse or a group like that because it would have cost you $300,000 versus one of these smaller audit firms with 20 people that do a good job generally for $50,000, $60,000 for a year.
Oh, thanks for the background. I mean, that's
so it's taken a while to get through that because we had 4.5 years of a skull and crossbone, and then so when you get back, the institutions that really understand can't buy us because our market cap's too low and they can't get enough shares. That's why they come to me and try to negotiate to put in 10 million at a shot, and I will no. I need to have some catalysts first.
That makes a lot of sense. Sense. Great. Okay, quick little final round, just for the audience to get to know you a little bit. So, it's your last day on Earth. Where are you going? What are you eating?
Wow, that's a tough one.
Loaded question, I know. Loaded question.
I know. Well, I'm making sure I'm having a lot of fun, so probably somewhere on the beach somewhere, and I'm going to have steak and lobster.
Ooh, can't go wrong with some surf and turf. Nice.
Maybe Bora Bora.
Hey, there you go. Do you have a dog yourself?
No, I travel too much. I had a cat for 18.5 years.
Okay.
He was a really good stock trader. I have on my Facebook, there's a picture of him in front of a trading screen with his paw ready to hit the sell signal.
I'm sure. Now that I want to see. I want proof of that. You guys are obviously based in Minnesota, so are you a Vikings fan?
Absolutely.
Well, you know what? This might affect our working relationship together right now, but I'm a Packer fan, so that's
Yeah, I mean, last week I bet on the Packers. I lost, of course. I bet on them the last 2 weeks, so I think the Packers fans are going to hate me because I keep jinxing them by betting on them.
It's been a rough year so far. That's for sure.
Yeah.
Great, man. That's great. Well, John, this has been awesome. Thank you so much for taking the time. It was great to kind of get to know you and what you guys are doing and hopefully showcase that to the audience. And, for whoever's watching this, take your time, do your own research, obviously. But I do believe that, as John mentioned, the risk reward on this is quite attractive. If you love animals and care for animals, I believe this is really an investment that you guys should look into and see if it's right for you, if it matches your risk tolerance and your own situation, then give it a go. So, John, thanks again. Take care and talk to you soon.
Thank you, Jay. Talk to you later.
Bye-bye.